line. So normally we have seen a lot of prices, inflationary prices, whether you see caustic soda, ash soda, all these prices have surely seen an increase, and that does impact the margins. But what is protected by was the savings that we've seen coming in by the management. And okay, we're joined by Naveen Kulkarni also. So Naveen, good afternoon. And what are you making of the HUL's numbers? What is the first take that you are understanding from HUL's numbers?
See, prima facie, the numbers are a beat on our estimates. Both profit as well as the EBITDA numbers look higher than what we were estimating. Even the revenue number is slightly higher than what we are estimating. So I think numbers overall look good. I think more we'll have to look at in terms of what are the volume numbers, and second important factor will be the gross margin.
Okay. And Naveen, what is the understanding coming in on volume growth terms as of now? Is there any figure that you could share with us? What is your estimated volume growth looking like as of now?
See, we were estimating around 5% volume growth for the quarter. But looking at the number could probably be slightly higher or in line. Or we'll have to again, the company gives out this number, so we have to wait and watch out for the volume number. But our estimate was 5% for the quarter.
Sure. And Naveen, as of now, when I'm seeing, surely the home care segment has done quite well, and they're saying that they're led by fabric wash as well. So, could we see, does this, show a trend that, this home care segment is doing well, while, with increasing mobility, could we expect, better performance going forward as well here?
At the end of the day, if you look at actual businesses, they are not so seasonal in nature, or let's say the opening up does not have a huge impact. Of course, products like cosmetics and all, there is an impact there. But if I were to look at some of the other segments, let's say fabric wash, I don't see that to be significantly impacted, because the seasonality is slightly less. But having said that, I would say that there is an improvement in the business because the raw material prices have been going up. So HUL could be gaining market share in the fabric care business. So that's a distinct possibility that we see in this happening right now and probably in the forthcoming quarters.
Okay, and also we're joined by Abneesh Roy from Edelweiss as well. Abneesh, what are you making of the numbers of HUL? They seem surely slight bit better than what everyone was expecting. So what is your take on it?
So we remain quite positive on Hindustan Unilever. As confined living is coming to an end, HUL will see benefit across many categories. For example, cosmetics, ice cream, skin cream, even detergent to an extent. Also, rural demand, if you see, monsoon finally ended quite normal, in spite of one forecast saying it will be much below expectation. So rural demand is quite strong for FMCG in particular. Also, we have seen some of the raw materials come off. For example, tea margins clearly will improve for HUL and the other tea companies also. So on the raw material side also, lot of the comfort is there in terms of price hike. HUL has taken multiple price hikes in soap and few even in detergent. So I would say HUL is well placed from the second half perspective, and we would expect volume growth to remain strong. Because definitely last year, if you remember, HUL had suffered one of the highest within staples space because of confined living impacting multiple segments. So we remain quite positive, and we would recommend investors to remain invested in this stock from a medium long term perspective.
Okay, and Abneesh, just one more thing I wanted to understand in terms of margins. Yes, you did say that, we are seeing some inflationary, the raw materials coming off, they're not as high as they were before. But, could this mean that the slight bit pressure that what we're seeing could continue even in the next quarters? What is it looking like as of now to you?
So, three things. One, of course, is now we will see the premium part of the portfolio do well. So, cosmetics, skin cream, etc. are good margin businesses. So that's one good data point. Second, we have seen even palm oil, if you see from peak, has seen some correction. We would also need to see rupee dollar equation here. but tea prices have already come off from peak by around 30%. So I would say that HUL is quite well placed in the H2 versus say last year. From a margin perspective, I would say that reasonably most of the issue in terms of margins is behind us. See, inflation is there for FMCG globally. It is at a 10-year high. Within India, the same thing applies. But definitely, FMCG companies have high pricing power and more so for HUL. So I would say that most of the concerns are behind. Yes, crude going up to $100, $110 will bring a fresh bout of inflation. But that will be for entire economy, entire sector. So it is not only for HUL.
Okay, thank you so much, Abneesh, as well as Naveen, for giving us an insight on HUL's earnings. HUL earnings, as of now, seem to be slight bit better and largely in line and slight bit better than what we were expecting as well. So keep an eye out on HUL. They'll be having the press conference soon. But with that, we'll end this edition of the newsroom on ET Now. Thank you so much for tuning in to ET Now from me, Vinny Motiwala, as well as the team who put this show together.